Okay, right. We are going to do something a bit different in this video. So rather than give you my sort of regular update on all things happening across the market, today I'm going to kick off a series of short YouTube videos that will give you what I'm calling the complete guide to technical analysis. So if you're interested in using technical analysis to inform a trading strategy or an investment strategy, stay tuned, because over the next 10 to 15 minutes, I'm going to talk you through one of the most powerful tools that I use to plot some of my trades, and that is support and resistance zones. We're going to focus specifically on the crypto markets, but I promise everything that I cover in this video is applicable across multiple markets. So you can use some of these strategies, whether it's Forex or commodities or equities that you're trading. But I know cryptocurrency is a popular market for traders, particularly lots of you that follow me through @Part-Time Charts here on YouTube and over on X. So we will dig straight into it. But obviously, I always start every single one of my videos by reminding you that nothing you hear on this YouTube channel or that you might see on X through @Part-Time Charts is financial advice. This is simply a way for me to detail my ideas, things I'm thinking about, and hopefully share a little bit of what I've learned and observed through obsessing over markets, and in particular price action and charts, for probably the best part of a decade now. So I hope you find some of it useful. If you do, please hit the subscribe button. Help me grow the channel, and I can bring you more of this content over the weeks and months ahead. So this is going to be the first in, like I say, a series of short videos where I will talk you through some of the powerful tools that I have learned in the realm of technical analysis. And the first one that I'm going to touch on is support and resistance zone. And I really do think, there's a lot of noise out there. People talk about moving averages, candlestick formations, the RSI. There's dozens and dozens of indicators that people reference on a daily basis if you're looking at technical analysis, and if you're following some of the analysts potentially on here or over on X. But despite all of that noise, I still think possibly the most basic, the most simple, and most effective tool for any technical analysis is support and resistance zones. And what I will do today is, with reference to the Ethereum weekly chart and looking also at BNB, so that's the Binance coin that is listed in the cryptocurrency world, I just want to talk you through some really basic principles that have allowed me to make profitable trades. And the first is mapping out really clear support and resistance zones gives you a structured way of both managing risk and plotting an entry on a trade. So if I take this chart here, I've already drawn out, so this is obviously in retrospect, but it is helpful. I mean, one of the things that I have done a lot of over the last few years is almost just go back through price action with a technical analysis hat on and place support and resistance zones and trend lines on charts and work out how, in hindsight, I would have played some of those trades. Now, clearly, it's a lot easier to play a trade in hindsight than it is in the moment, because you're not dealing with all the additional emotion that comes with having your cash tied up in a trade. But it does help you to just almost distill a set of principles, a set of priorities from a technical standpoint that hopefully you can apply to future trades. And here I'll kick off just with these two key support and resistance zones that we find here on this chart. So one at the $2,150 region, give or take, and another at the $2,000 region. And these are significant for me because if you look at during the 2021 correction, where we eventually found quite big support for Ethereum was at this level here, and the bounce that ensued off that level took us up from the 2,150 region up into the $3,500 region. So you had a gain of 65% once the market bounced off of this region. Eventually the market rolled over and capitulated beneath. But if you look at what happened, is that this level here began to hold as really significant resistance on the higher time frame. So you can see that this kind of positive price action that we saw after the bottom in June 22 was capped there and again capped here. That level combined with this level here, where I'm finding resistance on multiple occasions look like two really key areas of interest for me. And what you'll often find, particularly in the crypto market, is that as a level gets defined as support or resistance, any move above it and back under, we call this a deviation, where the price moves above the previous resistance zone and then ends up closing beneath and then back testing it here as resistance. Often that means that price is likely to trade lower or needs further consolidation before it breaks to the upside. And you can see that here we had this really positive move from these lows at about $1,000 all the way up into the $2,100 region. We were rejected off of this key support and resistance zone back under the second major SR level here, and price began to trade lower and trend lower, and it was a good sort of 6 months before price eventually bottomed. Now, what I am looking at when I look at this chart, I'm thinking, as I said before, how would I play this trade if I were back here in 2023? And the key thing for me is that once this first support and resistance zone is flipped into support on the weekly, that is the first sign of strength in the market for me. So previously we've been rejected, false break above, rejected, but here you can see that price is starting to stabilize and on a weekly basis is holding this as support. So this would be potentially the first sign of strength and the first indication that maybe I want to start thinking about going long here on Ethereum. The second sign of strength would be that eventually from this base here, price climbs above the second support and resistance zone, and you can see that for many weeks, I mean this is probably the best part of 2 months, so beginning of December through to the end of January, price consolidates in this zone here with this level held as support. That to me would be a really strong sign, particularly given that this is a weekly chart. So we're talking about higher time frames here. So the way I think about time frames is that if you're looking at a weekly chart, the trend is just that much stronger than if you're looking at a daily or an intraday chart, because price has been held like a ball. Imagine a ball being held underwater for many months. You know, the best part of a year and a half, price has been held underneath this level. So when it finally gets back above, there's so much pressure that has built up during this time that it's likely we're going to see a strong rally. And that's exactly what happens. I mean, if you went long here, the entire move played out at about 100% in terms of upside. And similarly, even if you were to get long on the second SR flip, you're talking about 85% from this level to where the market eventually topped out. So for me, and we can cover in future videos when I think about taking profits, you know, where I place my stop losses, but for the purpose of this video, just really simple, just plotting entries and thinking about how you use support and resistance zones to manage trades is really important. And it's important for two reasons. One, it gives me an entry where I can feel confident that price is likely to push up. Secondly, it allows me to manage my risk. But what you have to be careful about, particularly in crypto, which is so illiquid, and at times I think, you know, some of the activity, the price action that happens on some of these coins is questionable, you will inevitably get big wicks back underneath key areas where liquidity is likely to lie. So if lots of people are identifying this as a potential area to go long and leverage starts piling up before a move to the upside, it's likely that the market flushes some of that leverage out. And you can see that here with this big deep candle before price takes off. And so that's why, for me personally, I'm always very careful with leverage. I made some mistakes early on in my trading career that I still think about, to be honest. And I would hate to be in a position where I get the trade right, but I'm too greedy with the leverage. And let's say you're loading up and you're going into 10, 20x longs here. You know, this move to the downside of 15% is going to completely wipe out your position. So for me, if I'm either trading spot And look, you know, in the space of a few months, you're talking about an 80% move, 85% move. That is not to be sniffed at. That is an incredible trade if you can get it. But if I am thinking about using leverage, if I am thinking about amplifying my gains, if I've got particular confidence in a trade, I will keep the leverage small. So for me, in the crypto market, I'm talking about 2-3x maximum, because anything more than that, you know, even if you were entering up here and you were in a 5x trade, look, you're liquidated. You know, it takes a 20% move for you to be liquidated and all of your cash is gone. So even though you were right on the trade and you had a great entry, some of the volatility in the market in the short term stops you out and leaves you in a position where you've lost all your money. And look, this principle of support and resistance, you know, we can even apply it to where we are now in the market. You know, this to me looks like a really, really interesting zone. Again, I've covered this in some of my previous videos, but you've got support all the way here. You've got resistance and a rejection here, a big rally off the reclaim of this level. And then look at what's happened here. We've fallen back beneath. This area holds as resistance again. And now just recently, we've seen a back test of this level, which to me would have been a really interesting area to think about going short, despite the fact that everybody is super bullish on Ethereum and crypto in general at the moment. And, you know, not only can support and resistance zones be helpful in plotting entries, they can also be really helpful in plotting where we take profits. And I'll cover this in more detail in future videos. But if you got long here on the reclaim of this key support and resistance level around about here, the first natural place for you to take target would be back at these highs, and look at where the price ended up going to. So again, just drawing these really simple support and resistance lines can help you massively. What you have to do alongside that is control your greed, control your emotion, be really disciplined with stop losses and take profits. And again, we'll come back to some of that in future videos. So that's the Ethereum chart. And just very briefly, I also wanted to just point out how this plays out on something like BNB, which is the Binance coin. Again, an example from the crypto space, but again, you can use some of these examples and these principles regardless of the market that you're trading. So if you're looking at Forex, if you're looking at equities, you know, these principles are the same. I would say, having spent the best part of a decade staring at charts obsessively, the cryptocurrency market seems to be the place that respects support and resistance zones in a more rigid way relative to anything else. So I think if you get these principles right, the crypto market, despite the volatility, is a great place for me personally to be thinking about trading. The downside in crypto is that the illiquidity drives huge volatility, and if you're not careful, if you're not disciplined, if you're over greedy on the leverage, if you get fearful quickly, you can get stopped out. So we'll come back to risk management later on, but for now, all I wanted to show you is just the power of these simple support and resistance zones. I've done nothing on this chart other than draw 3 levels, and if I had have taken a trade at any one of these levels at any point in time, it would have been profitable for me. So the first is that this massive, let's call it a range low. So if this entire zone is just one big range, we can call this the range low, this the range high. This is something like a mid, although it's not mathematically perfect. You can see that there's some real sort of rejections and support going on at this area. But crucially, if you had have been going long back here at the end of 2023, when we were back at these lows, again, from a risk and return perspective, this was a great place to enter, because you know that any break beneath this level with a weekly close is likely to lead to significant downside, and you can hop out of your trade. But if it holds, then potentially we've got 2 targets to the upside here. The first is a move back to this level here, which you can see is a gain of about 70%. And you can see that we've got this clear support and resistance price action going on at this level. So longing from down here up into this region with a take profit here would be my first strategy. And if price breaks above this level and starts to hold, which it clearly did here, and especially with this deep wick back into this region here, any price action holding above this level here gives me a trigger for a second long, with the target being these highs that were put in 2021. And if you manage to grab the entirety of this move, you are talking about a 200% move, which is massive. And I don't think people appreciate that you don't need many of those trades in size to really dramatically change your life. I definitely wouldn't be going in size if you're new to trading, but it gives you an indication of just how powerful some of these really simple tools can be. Now, me personally, I like trading on the higher time frame, so I'm looking for these bigger moves to play out rather than obsessing over every tick on the kind of hourly, 4-hour, daily charts. I'm looking for the really big moves. And what's interesting now is that historically one of the most powerful trades for me in the crypto space has been when you get resistance zones that are clearly marked out, and then you get a move above the resistance zone, but it doesn't hold, and this attempt to flip resistance into support fails. Often that is an ominous sign that price is about to reverse in the opposite direction. So here, if I were trading this, despite everybody being really bullish on altcoins at the moment, I would be thinking about whether this is a trigger for a short back into this region to begin with, and then potentially back into the range lows. So really, really simple principles. And what happens if price goes against me? Well, if price starts to break above here, then I cut. And if I'm sensible with how much leverage I'm using, with the sizing of my position, all of which I will cover in future videos, then I can manage my downside risk so that it's kept to a minimum. So my risk exposure is small, but the potential gains, if I get some of these big swings right, is massive, because a move from here back into the range lows is a move of about 65% to the downside. Now, I have to say that risk to reward in crypto is definitely skewed in favor of longs. You know, catching this move here, it's the same size move, but catching this to the highs is a move of 220%. Catching the same move in reverse is only a move of 67%. So your gains, your upside potential are skewed massively in favor of you when you're looking at good long setups. But as a minimum, if I'm thinking about where do I take profit if I'm holding BNB, and where might I think about re-entering, even if it's just a spot trade and I'm not shorting, knowing that this is a place where I might want to be exiting the position and getting back into stable coins can be really, really helpful. So just a few basic points on support and resistance zones. Like I say, there is a lot to cover, and I'll be bringing you more videos, one a week, on some of the top tips that I have learned in the technical analysis space that might be useful to you as you're plotting your own strategies in the market. I thought I'd kick off today with one of the simplest but also most powerful tools that there are, support and resistance zones. So if you have liked this video, if you found any of this content useful, please hit the like and the subscribe buttons. I really appreciate your support as I try to grow what is a small channel, but hopefully brings a lot of value to the space. Take care.